Thanks so much for tuning into this earnings conversation. We're talking to Mr. Anil Rai Gupta of Havells, and their numbers were beat to most estimates, driven by arguably a robust sales growth of about 33% YOY, and I think the volume growth was about 20% as well. Margins on expected lines did take a bit of a hit. The questions, though, to Mr. Gupta are not just about the quarter, but how he thought of FY22 and how does he anticipate FY23 to be, considering that it seems to be a very challenging year, compounded by what the Reserve Bank of India has done yesterday. Mr. Gupta, great having you. I hope all is well.
Thank you very much, Neeraj. I think I would argue that FY22 was a much more challenging year as compared to what I anticipate in the FY23. FY22 we started off with the Delta wave, which was quite a deadly thing, which not only affected the morale of the stakeholders, but also affected the sales for the company. And then, when things were picking up very well, after that, the real estate demand, the infrastructure demand was doing extremely well. And then, of course, there was a little bit of a blip in Jan-Feb when the third wave also started kicking in. But after that, again, things are coming back to normal. We are seeing a very positive summer. So FY22 had, positives and negatives. Hopefully, FY23 will be much better. FY22 also had unprecedented rise in raw material costs, wherein the companies had really to work hard in terms of bringing efficiencies, bringing economies of scale, deciding how much to pass on, how much not to pass on, how much more to take a hit on the margins. So it was a bit of a challenging year. I think FY23, other than the challenge of the raw material prices continuing to remain high, we are moving into a better year with strong demand both from the consumer, residential side, as well as the infrastructure side. So things should start looking decent in the coming time.
Yeah, so I mean, on Q, the headlines around the air conditioner sales for the month of April were very strong. Looking from judging from the things around us, the temperatures in Mumbai, I'm presuming in Delhi and all over India, that segment at least should probably have a very robust summer, I reckon.
Yeah, I think partly it is because of the weather, but generally, heat is there in this time of the year every year. But it is also because of a pent-up demand, because the last two seasons also were low because of, again, the lockdown and the Delta wave. So there is a certain pent-up demand. The heat is high. This is generally a good summer season for air conditioning or fan products anyway. So all these things put together, the industry and the trade is generally excited with the kind of consumer demand which has come up in this season. So yes, it is a strong summer for summer products, but it has come after 2 years.
Enables you to take the much needed price hikes, Mr. Gupta, and do you reckon that they'll continue?
Yeah, I think price hikes is something which I would say neither us nor the entire industry could pass on entirely, because the cost rise in the last few months was extremely high. And certain times you take a decision that you don't want to pass on the entire cost to the consumer, which could hurt the demand. And that's why, there is a certain hit on the margins. And we believe once the costs stabilize and they start coming down, the margins should start coming back to normalized levels.
So during that Q3 con call, you had spoken about small price hikes in fans and ACs, and as the season kicks in, some more price hikes in other segments as well. So I understand you can't pass it on fully; it's virtually impossible. But to what extent have these been taken, and can we anticipate some more as well as the quarter goes by?
No, I think we are anticipating not any more price hikes. In fact, we took some in the fourth quarter. But again, the fourth quarter, because of the geopolitical reasons, the raw material prices further went up. So what was expected to cover the margins or the cost increases, the cost increased further. As I said, this is a high season time. People would be ensuring that their inventories do get sold during this season time. So there would be not a big expectation of a price rise in the near future. And hence, we are also expecting some sort of stabilization in the raw material prices.
Oh, okay. Which is great to know. I wanted two macro questions from you, sir. Firstly, how from an industry captain's perspective, how bad or how tough could the geopolitical situation prove to be for the industry at large? Because that continues even as the virus seems to be fading away.
Yes, I think the supply chain was a big challenge in the last few months, and as you rightly said, this continues. So this will continue to remain a challenge. But I think the world is now coming back to some sort of a expectation that there will be ups and downs for some reason or the other. So and especially if I talk specifically about Havells, I think that way we are quite well integrated in terms of our manufacturing. 95% we manufacture in-house. So there is not a whole lot of challenge in terms of supply chain for Havells.
Sorry, got it. One more question. I mean, after a really long time, we're seeing the Reserve Bank turn the tables, so to say, and it seems like this might continue as well. What kind of an impact, if you will, on consumer sentiment, on demand, and for your key segments as well?
I think with the kind of inflation which was happening due to, again, the global reasons, not necessarily specifically to India, I think it is something which was expected. And I frankly don't see a whole lot of direct correlation between interest rate hikes and consumption going down. There is strong demand on the infrastructure, strong input impetus by the government on infrastructure, whether it is or highways. CapEx cycle is turned around. People are investing. The commodity industries are also doing well. Hence, there is further CapEx which is happening. Real estate has started doing well. If we get a good monsoon in the coming times, I don't see a whole lot of demand, impact of this interest rate hikes.
Okay. Last two questions, Mr. Gupta. One macro, one micro. The macro question is just on CapEx. Really, I wanted to understand from you. I mean, the general perception is that while companies which got PLIs and others which have a time-bound CapEx to do might still go ahead and do the CapEx, but otherwise just the higher commodity costs might compel some companies to maybe take a slight delay to their CapEx plans. So what's your sense because of the elevated costs?
I think I don't fully agree. The companies are aggressive on the CapEx plans, especially the commodity companies, commodity industries, which had gone through a very bad cycle over the last 5 or 10 years. They are coming back with decent profits and hence investing more in CapEx in the coming times. So I think the CapEx cycle is strong. And, as I also mentioned, the government impetus on infrastructure is also very strong. So this should sustain, good news for capital equipment companies.
Which is great. So final question then, segmental for you. I mean, what do you expect in the near term because of this CapEx, the segments to do well? That is part one. And part two, a very small micro question, sir. During the third quarter on call, I think you had mentioned that you were hopeful that Lloyd's would achieve double-digit contribution margins in presumably the next couple of quarters or in the coming season. Do you reckon Q1 is that quarter?
No, I think on the second question, I think Lloyd is still some time away because of the high raw material prices and not the entire cost being passed on. So we would expect some cost stabilization for that to happen. And as far as the overall, I would say the demand is concerned, I think infrastructure demand, the CapEx demand, but it's also associated with good real estate demand and consumer demand. So we do expect a regular growth in all product segments rather than just project-oriented segments.
Okay, great. I'll get into the segmental minutiae in the next quarter. This was more about the big picture and because it was the end of the year, Mr. Gupta. So thank you so much for taking the time out and speaking to us about that.
Thank you so much. Thank you.
And all the best for FY23. Viewers, thanks for tuning in.